Welcome to another episode of this course. And again, we start out by looking at the economic calendar as always. And as you can see this week, we don't really have a high impact or like one of the big three high impact news. So we have no CPI, no NFP, and also no FOMC. We only have kind of the normal high impact news events, right? So we, for example, unemployment claims, core retail sales, and stuff like that. So usually, when we are expecting a reversal on a higher time frame level or on a higher time frame basis, we usually see that happening with a news release or being coupled with a news release such as CPI, FOMC or NFP. And as we don't have one of those news events this week, we probably will see some consolidation, especially if we look at the charts where we are trading right now. So last week we finally have traded into our weekly buy side objective, right? And now we're pretty much anticipating some sort of consolidation before we either see a continuation higher into these highs here, or we will see a retracement or a reversal after taking out the weekly buy side and also the weekly volume imbalance, which is marked out here in the purple shade. So yeah, again, if we take a look at the economic calendar, we can see that we have high impact news in pretty much every New York session of the week. So we will also focus on the New York session this week, not that much on London session. But again, for this week, we will probably not see lots of possibilities or opportunities in the markets. And again, we skip Monday as we don't have NFP week, and we also don't have a clear short-term draw on liquidity from last week. Therefore, again, we will skip Monday. And also, if we think again in terms of the trading conditions, the price-based trading conditions, right? We have, first of all, we are heavily overextended. You can see we had two massive daily candles right here. And we also trade into the buy-side liquidity pool. So we have two reasons now to anticipate some days of consolidation, and then we want to see if we can see like an H4 or H1 change in order flow, and then go from there. So if we go down to the H1, we have the weekly open right here. We have a minor gap to the upside here. And now if we mark out the previous day's high and low as the nearest short-term drawn liquidity. So we have the Asian session, and then London taking out the previous week's high as well as the same previous day's high in this case. And we then also take out the previous day's low, right? So just a typical consolidation profile. We take out the previous day's high and previous day's low. If we go to the M15, so you can see we pretty much taking out the buy side, then we've broken below this propulsion block or order block right here, and then you can see how we used this breaker block here or mitigation block to then send price lower into the Asian lows and the previous day's lows as well. But again, as we did not plan to trade today, there was no setup for us, and that's why we skipped trading today as well, as we always or most of times do on Mondays. So back to the H1, and we wait for the daily close again. And there we go. And now again, we want to see what the Asian session is doing. So again, we want to focus on the New York session, right? We don't really want to trade London session, especially because we don't have a higher time frame drawn liquidity anymore, and we already, as you can see here, we are in a consolidation here, and we pretty much, what we want to do right now, we want to wait for a change in order flow, and then we want to look for shorts for retracement back into, if you look at the daily, back into this inefficiency here as our first target, and then also the Monday lows here, right? So back to the H1, what we can see here, we have taken out the Asian highs, and then we've also had a rate of the pre-London highs as well. So again, if we think of our session profiles, we have the London reversal here, right? We take out the buy side, and if we combine that with the daily profiles, we have the Monday range, right? We are trading above the Monday range, and now we have the Monday lows as a potential short-term drawn liquidity. And now we have news coming up in the New York session, retail sales at 8:30. So that's where we want to possibly look for shorts aiming into the Monday lows. And as you can see, we reverse right at the top of the weekly volume imbalance. Also, let's take a look at the DXY. So we are using again the candle chart. So again, we compare the highs and lows of DXY with the highs and lows of Euro, right, to find potential S&Ts. And again, we use S&Ts as a tool of confluence once we are trading at a higher time frame level where we are anticipating a possible reversal, right? So in this case, we are now trading at a higher time frame level. We are trading inside the weekly volume imbalance. We have taken out the weekly buy side. So in this case, we now want to take a look at the DXY to find potential divergences to then use that as a tool of confluence to add to our thesis that there might be a potential reversal once we see a change in order flow. So again, S&T is only valid once we also have a change in order flow. So let's take a look what we can see here. So if we compare the highs of Euro, we obviously want to use the lows of DXY, right? Because they are negatively correlated, right? So I quickly mark out, you can see here, we have the Friday lows of DXY, and we have here the Friday high of Euro, right? And if we compare the lows of today's low with the Friday lows of DXY, you can see that we have not taken out the Friday lows, right? We have Friday lows here, and we have failed to take out this low. So now if we take a look at the Euro highs, right? So if Euro, if DXY fails to take out the Friday lows, then respectively Euro should normally fail to take out Friday highs, right? Because this is the normal correlation. But as we can see here, we have Friday highs right here, and you can see we have taken out the Friday highs on Euro, right? You see, we have taken out the Friday highs while we failed to take out the Friday lows on DXY. So there might be a potential daily S&T between Euro and DXY in play here, right? So again, just because we have a potential S&T here, we are not shorting here right now. We still need more confirmation. but we can use the Monday range to frame a potential intra-week reversal here, right? Again, we have the SMT. I mark it out again. SMT between DXY and Euro. And we also have, as you can see here, we have a change in order flow. First of all, we broke that swing low. So we have a classical market structure break. And we also have this order block here, which we failed to hold. So we closed below. And we then have here now a breaker block, right? So if we want to look for shorts for New York, we now want to use this level as our higher time frame POI to then look for shorts aiming into the Monday lows, right? So we're waiting for New York session to start. And for now, as you can see, we have traded above or closed above the mean threshold of this breaker block. We still have this balanced price range here. But again, we really want to wait for a setup. We don't want to go in early. We still want to see a confirmation here, because we could easily go for another run of those highs here. If you remember, DXY still has equal lows now, so as long as we don't have a higher time frame change in order flow, the SMT is not confirmed. That's what I'm saying. You want to wait for a higher time frame change in order flow, and then you take into consideration the SMT. But for now, we don't have that, so therefore we want to see maybe another rate of this high here. As you can see, this high happened during London lunch, and maybe we get another rate of this high here, and then we want to see maybe an M5 or M15 change in order flow here, and then we can take a short aiming for the Monday lows. And there we have news coming out at 8:30, right? And now we also have taken out this high again, and again we have a change in order flow here, right? We have this order block, we close below, so we have another breaker here inside this breaker, and now we have a setup here. We could short here, so we put a limit at the breaker low, and in this case we can put our stops right here. So we have this wick here, and if we draw the mean threshold, so we use the wick high to wick low, and now I don't want to see price trading back above this level here. It should distribute price inside the breaker here and then send lower, but we can see some wicks inside and a bit above, but we should not trade above the mean threshold of this wick here, because a wick is again a balanced price range. We have price trading up, trading down, so if we go into lower time frames of that wick, then this would look like this. We offer buy side, then sell side, and now we should not trade back above the middle of this balanced price range here, right? So entry here at the low of the breaker, stop at the EQ of the wick above the breaker block here, and then our TP would be the Monday lows, right? TP, Monday lows here, and now we want to see if we can get a fill or if price is going straight down into the objective here. So if price is trading into a low before getting a fill, we will remove the limit order, as our drawn liquidity has already been met, and if we get filled before we take out the low, we can obviously leave our limit order, right? So again, a recap of the trade. Step 1, the trading conditions. We said we are trading in a range in consolidation, so we only want to take trades at the extreme of the range. We have taken out the previous day's high here and the previous week's high. We have a potential SMT here, which is also kind of confirmed with the change in order flow on the M15. And then we have also the session narratives. We have London making the high of the day, and now we want to see the New York continuation. And again, for the daily profiles, we have the Monday range. So we have lots of confluence for taking a short here. And now let's see if we can get a fill here. And there we go, we got a fill here. And now we want to see if price is being able to trade lower here. So now, as a potential invalidation, I would close my trade earlier if we get a close back above this breaker here. So as long as we close like here, only wicks inside of breaker, or close below the mean threshold, I will hold my position. But as soon as we close back above, I will close my trade for like a small loss, like a 0.5 R loss. And because then the probabilities of price going lower will decrease significantly. So price should now send here in London close session into the previous day or the Monday's low here. And as you can see, it's a lot of back and forth, but again, there's a typical price action for a consolidation profile or consolidation market environment which we are currently trading in. So therefore we have to be a bit more patient with our take profits. So now, depending on your own risk management, you can say, okay, I don't hold trades overnight. You could have closed it here for like a 0.8 R trade, something like that. Or you can also hold that level here and move stops to break even, or leave your stops here, depending on what you feel comfortable with. But now, let's see what the Asian session is doing. And there we go, London session then takes out the Asia highs and then sends price into our TP. So we did not trade Monday session. Why? A London session of this day, because simply we are still in a trade. We have still the bias of lower, but also we are trading. If we take this, our range here, range high, range lows, you can see that we're pretty much trading at the EQ of the range. And again, if we're trading in a range, we only want to take trades at the range highs or range lows. So that's why we did not take any fresh position today in London session of Wednesday. So now again, we are trading in this daily fair value gap here, and we have again news coming out at 8:30 New York time today. But we don't have a bias now. We are going back to a neutral bias because we are still range bound, and we are still bullish on the H4, the daily, and we've just hit TP of our trade. So now we want to wait until the daily or the H4 or even the H1 gives us some new information, and we then can go from there again and frame a new narrative or a new bias. So again, we are now waiting for the daily close, or before that, we want to see what the New York session, the news event, is doing with price. If we can keep going lower here, or if we go back to the highs here. And it ended up being to the downside, so we traded lower, but again, we did not have any clear bias, and we are still trading at the EQ of the range. So the trading conditions from the price action wise are not in our favor. That's why we stay out of the marketplace and don't take any trades. So if we check the H1 now, we can pretty much see that we now have a bearish H1 order flow here established since Tuesday, making the high here, and we also have an H1 right here of London highs, of the Asian highs as well. we closed below this body here. So all of this, the up close candles here, they create one order block again. So we have an H1 order block here, and we now want to see if we retrace into the day close, so if we can close down here. So we have the day close right here. If we take a look at the daily chart, you can see we have the daily fair value gap here. I mark that out, daily fair value gap. And now we want to see how price is reacting from that daily fair value gap right here. Are we able to push higher again, or are we disrespecting the fair value gap and get a close below? If we get the close below, so we trade lower, then we can close below here. Then we can use this daily fair value gap as an inversion level to look for potential shorts, to then aim for lower prices to trade into those inefficiencies right here and those lows here as well. So we have now this order block right here, and now again we have the Asian session, London open now, and you can see we retraced back into the range, and we are again trading at the mean threshold. And now it will be interesting to see if we can close above here, or if we are being able to hold this level and keep going lower here, right? So for now we're just observing the order flow, how price is respecting the higher time frame PD arrays. Are we willing to trade lower from here, or are we still range bound, or even in a bullish environment where we will see higher prices from here? So again, we had Asian session pretty much being trending, so that's again not the best conditions for London session. So therefore we will stay again, also because obviously of the price action reasons I've been telling you all the time now, but also because of the previous session. We now don't really want to get into trades here. And as you can see, the order block here ended up holding, and we trading now probably into the previous day's low, and also at the EQ of the daily fair value gap here. And now it's getting interesting. You can see we had a sell-off here right into the daily fair value gap lows, and now we want to see what the daily close is doing. Are we able to close below here, or will we retrace back into the mean threshold, or even back to the fair value gap top here, right? And as you can see, we had a really bearish close here. We almost closed at the daily low. So if we take a look at the daily candle, you can see that we pretty much closed below the fair value gap. So now at this point, we can say that we have a potential change in order flow, and we can aim for lower prices here to rebalance. Also, if we take the swing high to the swing low, you can see that this right here marks the discount level, so we probably will trade at least into the discount of this range. So our next target could be the discount of this range here, which is also aligning with this daily fair value gap here. So we marked it out as well. And now, as I mentioned, we want to use the lower half of this daily fair value gap as an inversion level, and look, or use this area to look for possible lower time frame entries, to look for shorts, aiming for the discount here of this range here, right? So again, that's how you use the daily chart and how price is respecting the PD arrays to then frame where the next daily candle is likely to expand to, right? So always, if you're trading, you always want to be able to anticipate the direction of the next daily candle. If you have no clue what the next daily candle might do, then it's automatically a low probability environment, and you might want to skip trading for that day, or you want to stick to lower time frame scalping. So Friday, now that we had quite a large sell-off the day before, so we had 40 pip New York, and then you can see we had pretty much the same range after New York as well. So we had like almost like, if we actually check it, we had a 110 pip daily candle, so that's above the average range of the previous days. So therefore, again, we probably will see a consolidation profile here and then form a daily fair value gap here, and then on next week we probably will see some continuation to the downside. So probably we have this low as our short-term short liquidity here for the day, but again, we probably will see just a range here and a consolidation. So we've taken out the Asian highs, and we also, you can see, we're trading at the range lows of the daily inverse fair value gap. Let's actually hide this weekly volume imbalance. And if you go to the M5, you can see we also have a shift in order flow again on the lower time frames. Have a propulsion block right here, which we closed below here, then had an immediate rebalance into the propulsion block, breaker block, and then saw the sell-off into the Asian lows. And now you probably will see also a trading into these lows right here as well. But you can see price is really not delivering clean price action. We have really relatively large wicks compared to the candle bodies, so it's a lot of back and forth again, and typically for a daily consolidation profile. So let's go to the M15 again, because it's taking too long else. So, and there we go. As mentioned, we hit the short-term short liquidity, the Asian lows, and the previous day's low as well. But again, I'm saying it again and again, just because we know we think we might know the next short liquidity doesn't mean we have to take a trade. Taking a trade requires much more, or a setup requires much more than just having the idea of where price might be drawn to, right? So now we have Friday New York session closing here, and it's already late in the week, so therefore we are done with our trading. As mentioned, this week was really slow. We had one trade, 2.3 hour trade, and weeks like those where you expect a weekly consolidation profile, they are more about preserving capital instead of forcing any trade setups. But we had one really decent setup right here on Tuesday, but you can see it took multiple hours to get a 40 pip move here. Now we will see where are we closing on the week, and then we will go from there next week. As mentioned, we have the range, premium, and discount, and we have the discount of this range as our next target here. So there we have the weekly close, and you can see we pretty much had a daily consolidation profile to finish off the week. And we also have now created a daily fair value gap, which is also a daily BPR, right? We have fair value gap here, fair value gap here. They both overlap each other, so we have a balanced price range right here. So we can use this POI here as our higher time frame POI to look for shorts aiming into this level here. So this will be the plan for next week, and how we will frame trade ideas based off that higher time frame idea will be the topic of the next video.